The question of when to get in or out of a trade have always been one that has been there with traders, with a lot of traders over time. Oftentimes you find a lot of traders complain about getting into a trade either too early and then watching this trade edge trades to take out the stop loss before going in the direction they had earlier anticipated the market to, or you find traders complain about overstaying a winning trade until it becomes a losing trade. Now, in this video, we are going to be looking at some of the tips and questions as to how to create an edge for yourself using the best entry and exit strategy that you can as supply and demand traders. My name remains Monaco Daniel, and I make video that help you become a better trader. If you find my content quite interesting, don't forget to like this video, leave a comment below, as well as subscribe to the channel for more interesting videos. Now, without taking too much of our time, I'm just going to head straight into entry and exit strategy as supply and demand traders. So we might want to ask ourselves the big question: why is it important for us to look at entries and exit strategy? Why is it important for you as a trader, or as a trader that wants to be a successful trader, to create an entry and exit strategy for yourself? Now, when you get into a trade as well as when you get out of a trade is as important as your own bias as a trader. You might make a good analysis, a nice trading setup and all of that, and then execute it at the wrong time. You can lose a winning trade because of wrong timing. So entry and exit are very important factors to any trader looking to become a profitable trader. So it is very important to take entry and exit quite serious. Now remember that we are supply and demand traders. A lot of traders do entry and exit differently, but I do mine as a supply and demand traders. And remember, supply and demand traders, we basically trade 4 setups in the market for reasons known personally to me as well as my mentees. I kind of trade only 2 of those setups, but I'm not going to go into that in this video. I'm just going to head straight into looking at entries and exits. Now, this is the price chart for Bitcoin. This is the 4 hours price chart for Bitcoin against the US dollar, and I'll try as much as I can to pick out some obvious supply and demand setups in this chart, and then we'll look at it together. We'll try to take entries and exits together, supply and demand traders. We have a supply setup up here. I'm going to work with this for now, or I'll also pick this for demand. So we have a supply setup up here as well as a demand setup down here. The first thing to take note of before you even start talking of when to enter as well as when to get out of a trade, you need to be looking at a particular zone. You need to be looking at a particular supply or demand level. We ordinarily want to buy in demand as well as sell in supply, and we will be using that concept in this video. You can do this as well with your multiple time frame analysis approach and whichever trading approach you want to take out for yourself. Right here I have a drop based drop, which is the first thing you should look out for. You need to look out for your setup, your trading setup. What setup do you want to trade? A drop based drop right here. Now ordinarily we'll be looking to take a short from here, and as you can see, the market came right into the zone. We saw a big sell-off from this zone, came here, did a little sell-off that's we are not yet very sure of. This could still continue down and all of that. What exactly we are trying to look out for in this video is that reaction. What do we need to see along this level that confirms, that proves to us that, oh, this is a good price level you might want to get into a trade, you might want to take a short from, you might want to take a sell from. Now, entering into a trade generally is broadly divided into two, depending on the type of traders. There are those that we have, the no confirmation entry traders. These are basically traders that don't wait to see market confirmations before getting into a trade. They basically mark out a quality setup, and then once prices just get into that zone, they take their entries right from within the zone and then sets a stop loss slightly above that price level. Yeah, so this basically are traders that, like the name implies, they don't need to see a confirmation in the market to trigger their entry or exit out of a trade. All they need to get into a trade or out of a trade is just markets going into that zone, into that price level that they had marked out, and then they have a trade for themselves. But for most traders, we have most traders to be more of the confirmation entry traders that would mark out a price level and then want to look out for certain confirmations before getting into a trade. So some of the most obvious confirmations as supply and demand traders is, remember, most times we want to get into our trades on smaller time frames. So as supply and demand traders, for sell setups, some of the easiest thing to look out for when you want to take an entry is rally based drop for supply, as well as drop based rally. A lot of supply and demand traders wait for that formation, like we have up here, of a rally based drop within a higher time frame supply zone to get to trigger an entry. Like, you could go as far back as your 15-minute time frame to get this. I usually advise traders who use this as a basis for entry to do it on much smaller time frames. Yeah, on much smaller time frames. So within this higher time frame zone, we have something up here that looks like a rally based drop, a very strong impulsive leg, and up here we have a drop based rally. So for a confirmation trader, basically what is going to be looking out for are these structures, these supply structures on the 15 minutes or on the lower time frame that confirms high supply, that confirms strong presence of sellers in the market. Here we have a rally based drop, we have a rally based drop here, and then we have a rally based drop here. So confirmation trader using the supply and demand trading method would ordinarily be looking out to see these setups, these supply setups within a higher time frame supply zone. We have a 4-hour supply zone up here, and then we have 15-minute supply setups, rally based drop, rally based drop, rally based drop. And in fact, we also have something quite interesting here that could be taken more seriously. We have a drop based drop, and then we have a drop based drop within this bigger time frame supply setup, and then you see prices heading back to this lower time frame drop based drop before going in the direction of a downtrend, before falling right from this level down here. Yeah, so whichever way you want to do it, you could mark out a supply zone and then wait for that retest of the supply zone before taking your trade. I think we have similar case here, a drop base, we have multiple base candles here, and then a test to those base candle, and then we head down. Yeah, so this is it for confirmation of supply. I'm going to do this with the demand we have here. We have a demand zone down here, yeah. Okay, we have a demand zone down here. Now what I'm looking at from here is just this reaction from the demand zone from this point up until this point. So I want to see how market build up on the lower time frame. I'm still going to be using the 15-minute charts for this video. I'm going to be using the 15-minute chart right here. Okay, like I said, this is the 4 hours demand zone, and then what you can find in this demand zone, you see a drop base, multiple base candle, and then a rally, drop base rally, prices coming back down to test this base and then taking off in the direction of an uptrend. So a drop base rally within the bigger time frame demand zone, coming back to test that drop base rally and then going in the direction of a trend. So it's pretty much the same as we saw in the supply zone previously. It's pretty much the same approach, pretty much the same approach, the same psychology around the whole thing. You have a bigger time frame setup, a bigger time frame zone, and then you go down to whichever time frame you want to take your entry. You just go down. You could do this on the 1 hour, 30 minutes, 5 minutes. Personally, I go down to as low as 1 minute to 5 minute charts to take my entries, to take my exits. I go down to 1 minute, 5 minutes, 15-minute charts to get confirmations for entry and exit. So you could do this. And remember from previous videos that we talked about refining your demand zone. I didn't bother to refine these zones because we are basically just using this for the purpose of this video, and I'm trying as much as I can to not to make this video too long. Yeah, you could refine this to something smaller like this. Is going to help you time your entry, get a more precise entry and exit and all of that. Yeah, now so that is it for entry. Now moving into exit. When to get out of a trade is even, for me, it's even more important than when to get into a trade, because you could be in a winning trade and then end up losing that trade because you probably didn't get out when you are supposed to. And greed is literally the most widespread problem of most traders. You get into a trade and you just want to override your profit. You override your profit to a point and then it becomes a losing trade. So when to get out of a winning trade or out of a losing trade is as important as getting into a trade itself. Yeah. Now there are two approaches. To getting out of a trade. There are basically two approaches to getting out of a trade, which is firstly getting out by taking profit. Yeah, the aim of every trader is to make profits, grow their trading accounts and all of that. So when we make market projections, we make expectations from the market. We make these projections based off on expected returns from the market. Yeah, so profit targets are very important to trading, but how exactly do you set your profit targets? Yeah, so getting out of a trade by taking profit is one, like I said. And as supply and demand traders, I think the most common and easiest way to get out of a trade to get out of a winning trade by taking profit is getting out at the next opposing zone. If I'm looking to get into a short or a sell position from up here, then I'll be looking to take profit down at the next major opposing zone, which is going to be this demand zone right here. Here we have a rally based rally, and then up here we have a drop based drop, which is a supply setup. If I get into my sell position up here, then I'll be looking to take profit down here, because this is an opposing zone. This is an opposing 4-hour zone. Up here I have a 4-hour supply, and down here I have a 4-hour demand zone. Now definitely market is going to react to this demand zone, but to what extent market is going to react to this demand zone, I can't tell for sure. Market could bounce off this demand zone and then just go up. I don't want to sit in a winning trade and then watch it becomes a losing trade. So for me, I'm going to get out at the next opposing zone and then look for a position to get back in. Now on setting multiple take profit, the easiest way to go about that for me is looking along the opposing zones. Now in setting multiple take profit levels, you could set it along different time frame. Now this is a 4-hour demand zone. You could adjust to a daily time frame demand zone to set your next take profit, and then go down to the weekly demand zone to set your next take profit, and then like that. Or you could look along your current time frame and then just mark out multiple opposing zones. Up here is the supply we are getting in. Down here is the demand we look to take the first profit, and then we might be looking down here at another demand zone to take our second profit, and then another demand zone below that to take a third profit, and all of that. So it solely just depends on you as a trader, your type of trading. And don't forget, we can always try this out on different time frame. Like this is applicable to different time frame, not just the 4 hours or daily time frame, but also to any time frame. So I said exiting a trade, there are basically two ways of doing that. Firstly, you exit in profit, which is what we just talked about, and secondly, you exit a trade when you are sure that the trade is no longer going in your direction. Now imagine I had gotten into this trade right here, and then the market just goes up to this point, comes back down, let's say to somewhere around here, and then going back up here, and then going up here, down, and then continuing the uptrend. And then continuing in the direction of an uptrend. Now this is a valid supply zone, but there are certain instances in the market, mostly backed up by fundamentals and all the rest, that certain key zones are not necessarily going to get respected. So what do you do when you have identified a particular supply or demand zone, looking to get into a trade in those zones, or probably you've taken your entry along that zone, and then market just blow right through your zone like it did here? What do you do? Well, for a lot of traders, I think what most traders does is they set their stop loss slightly above this range. Here we have a supply range, a supply zone. Most traders are just going to set their stop loss tightly above this range, in a way that if market blows through this supply zone, then they would be out of the trade by a very minimum loss. while they look for better opportunities to get back into the trade. But that doesn't necessarily work for me. Yeah, not really like it's a bad idea, but it doesn't really work for me. Yeah. So what I do most times is I set my I I mark out an invalidation zone instead of a stop loss level. I mark out an invalidation zone. I don't just get into a trade along a particular zone and then set my stop loss slightly above that zone. First, I look at the market structure and then set my invalidation on the previous swing structure. Yeah. So for um for a trade like this, for example, this is not a perfect trend, but I'm still going to use this. For a trade like this, if I'm getting into a short in this position right here, then I'll be looking to get out if the market goes against me somewhere above the swing high. Yeah, because getting a market closing above this level, to a very logical extent, signifies a change of market structure. It shows that the trend is no longer my friend. Yeah, I think I'll be right to say that. It shows that the trend is no longer my friend, or the trend is probably no longer going in the direction I would earlier anticipate. So I want to get out of my trade on an invalidation level rather than just marking out a tight stop loss to get out of safety. Trading is a very risky game. I understand that. I don't want to play too safe. Yeah, I know it sounds crazy, but I don't want to play too safe. I want to give my trades more like a breathing space to consolidate before deciding to either go in my direction or against my direction. So it's for me, it's more like from this point up here to this point is going to be that consolidation range for me. It's going to be that vacuum that I have left for the market to do its consolidation. So I don't just look at getting out above my supply level. I look at getting out once market structures have been invalidated. Yeah. So that is basically it for entries and exits. Yeah. So I had recently started off my mentorship program for those who are interested in learning some of my secrets about supply and demand trading, how I trade supply and demand methods separately. Yeah. And for those, I just thought to bring it out here. I'm going to be doing a one-on-one mentorship program for the rest of the year. Anyone who's interested in not just, I think mentorship is not just about learning to trade. Mentorship is about learning from someone else's experience as well as getting guidance to trade. Yeah, that is very, very, very important because you could literally learn from anyone, but you need to be guided. Guidance is very important in becoming a successful trader. So that is on my private mentorship, one-on-one mentorship is on and is going to be on for a couple of months. Anyone who's interested can reach me out on Telegram. I think I'm going to leave a link to get across to me on Telegram in the description box below. Do have a great day and enjoy your trading experience. I remain Monaco Daniel. Enjoy.